Howdy. Welcome back to Dion Talk. Recently, I did a video that I was not going to put on my channel.
But not today.
I did this video with two of my friends, Michael Zuber from One Rental at a Time and Matt, the Lumberjack Landlord, two investors who have over 20 years of investing each, massive portfolios, and are killing it. They're super successful. And I didn't want to put that video on this channel because my goal is to share the information on how I went from a really bad position and made work optional and reached financial freedom. Literally, the goal on this channel is to teach the average individual that you can reach financial freedom in 10 years or less and make work totally optional, even if you're not starting from the best position. And to do that, I usually like to say, here are the tactics and strategies that you can use, easy to reproduce. This is how cash flow works. This is how much money I invested in the property, down payment, closing cost, immediate repairs. Like, here's the payments, here's the cash flow, here's the profit. Break it down, how to screen tenants, how to manage tenants, how to get the best interest rates. Like, these are the videos that I want to make to help you reach financial freedom. This video that I did with Matt and Mike was me being transparent. We don't all have the same goals, and we don't all have the same group of people to bounce things off of. On my channel, the goal is to be as transparent as possible. I want to share the actual numbers. This was the down payment. This is the rent payment. Like, I share the numbers, and it's relatable. We can think, I can buy a rental property. This is how I save a down payment. This is how I work on credit score. This is how I talk to lenders. This is how I talk to an agent. Like, these are the steps to get started in real estate. And 10 years ago, I couldn't fathom the numbers that I was going to share with Matt and Mike. They're still numbers I can't really wrap my head around, which is why I wanted to talk to them, because they've been doing this longer and are more successful. And I was trying to think, how could I share this information on my channel that does two things? One, helps you stay motivated because the first 5 years suck. And I want to get you past that with some motivation and saying, here's the problems you're going to have when you get to the 10-year point. The first 5 years before the income snowball kind of suck. Once the income snowball kicks in, it's not that you don't have any more problems. It's that you have different problems, and they're problems I want to have compared to the problems I had to have in those 5 years to get to this point. So that was the first thing I wanted to do. Make it relatable, make it useful. The second thing I wanted to do is I wanted to avoid looking like a douchebag, bragging on the line about how much money he's made. The guy standing next to his Lamborghini, the guy, or, the rented Lamborghini, or sitting in front of his stepdad's big, huge mansion, or whatever he's doing to make it look like he's successful. So you'll buy his course. I'm not selling a course. Someday.
But not today.
But I wanted to share actual numbers so that you can kind of see exactly how does an investor make their decisions. So in this video, we get to see Matt, the Lumberjack Landlord, spell out how he sees things, Mike spell out how he sees things, and then we kind of have a back and forth to figure out what best options are first. So if you could do me a favor in the comments below, after I take a big chance and literally expose myself to everybody watching this video, two things. First, should I take it down? Am I just bragging about making a bunch of money? And second, what do you think I should do? Enjoy.
Good morning, good afternoon, good evening, folks. Michael Zuber, One Rental at a Time. As promised in the daily financial news, it is Cinco de Mayo and the Three Amigos. It just goes together. And folks, Dion teased this last week in his live stream. We are going to talk about a situation that he finds himself in. Matt and I are going to ask a lot of questions and ultimately give advice that Dion will ignore, just like last time. But we will feel better. How you doing, Dion?
Hola. ¿Cómo están ustedes?
Bien.
I'm doing great. I'm ready for round one. I'm a little nervous because this is just going to be top of mind awareness, the numbers that are in my head, and I'm going to share it with complete transparency. So don't sue me, bro.
Very cool. And Matt, how are you?
I'm doing awesome. With it being Cinco de Mayo, I might even make a drink, but not today.
There you go. There you go. Well, Dion, the floor is yours. Why don't you set this up, and then we will get into it. I think you are in a enviable position, one that you have earned through sacrifice and consistency, one that many of our viewers hope to find themselves in. And frankly, I think a situation that a lot of people are in. So let's lay it out and we'll dig in.
Well, I appreciate you guys doing this because one thing I would like to suggest to almost everybody watching is have a circle of peers that are trying to do something similar. They could be online, they could be personal friends, whether it's how you save, how you invest, how you're advancing at work. Have people that you can talk to that are trying to do something similar, so the advice at least matters. And the reason I wanted to do this on your channel, Mike, instead of mine, is because I'm going to share transparent numbers. And on my channel, I think it would come off like I was bragging. I'm actually here literally saying, you guys are way better at this than me. What do you think I should do?
Mm-hmm. Okay.
He just wants to get around the mentoring session cost. Like
everyone. This is how you do it. Literally made a channel for over a year for this.
This is the one.
This is the one.
You slow played me.
Right. So the long con.
The long con.
So 10 years ago, I was in a bad position, had a lot of bad debt I didn't know about until the divorce. I was making $17 an hour. So the numbers I'm going to be saying now as a single parent with 3 kids are numbers I couldn't even fathom.
Right.
All right. So first, I have a W-2, and I want to kind of take that out of the picture.
Okay.
Okay. It's good. I run a CDL school. It's a much better job than what I had 10 years ago. I was just an instructor, had just started, making more money there now. The income snowball kicked in around 5 years. So instead of buying a property every 2 years, it's been every year, then every 6 months or so. And so the income snowball has kicked up to saving currently $360,000 sitting in a savings account.
That's awesome.
Of which I like to keep 30,000 as a reserve.
Okay.
That 30 is separate. That 30 is separate, but it's part of the 360.
I just have one account. It's all in there, but it's like that's going to be not touched or used.
Got it.
Okay.
Got it.
All right.
Yep.
Okay.
I have $10,000 locked away in a retirement account. I emptied it out in 2020, but I'm still contributing for the match, so it's up to 10 grand.
Okay.
That irritates me
Yeah.
that it's there. I want to buy the next property, but interest rates are up, prices are up. So just like everybody watching, I'm struggling to find the great deals. I expect great deals to come. I'm excited about we're swinging back to a buyer's market, or at least a stable market where we can find those motivated sellers. I have 7 properties with 6 mortgages, about $1.8 million in debt. Property values are a bit over 5.4 on last.
Wow.
I did what do you call a
PFS?
Personal financial statement thing that Matt helped me learn how to do for Convoy Home Mortgage, because they have the loan product where you have to actually be a grown-up and have one of those.
Yeah.
And that's how I found this out with, by going off of recent appraisals and 2 refinances, what the current values of the properties are.
Okay.
Cash flow is a bit over $24,000 a month coming in rents, mortgages and setting us.
You owe 1.6, you said?
1.8.
1.8. Okay.
It's like 1.78 something now.
That's
but
fine.
yeah.
1.8 is good. Yep.
You said cash flow, but I don't think that's the right word. I think it's
No. So I was going to get to cash flow and break down the numbers.
So this
It's a little over
24,000 is
24,000
gross.
coming in monthly gross. 11,000 going out, and that's principal, interest, taxes, and insurance, and setting aside 3,000 a month for maintenance, vacancy, and repairs.
And that 3,000 is in that 11.
That's in that 11, right? So
Yeah, got it.
just about 14,000 in pure cash flow.
Okay.
That is net spendable. You can do whatever you want. Okay. All right.
It's going to be in the account when I get home after this trip, and I'm here taking a trip, spending $10,000 a month, and my accounts are growing.
So that's the end of the numbers, right? Or do you have more?
YouTube, I make about $500 a month. Amazon affiliates, I make about $1,500 a month. So there's some other income coming in.
Okay.
But
so side hustle is about $2,000 a month.
About right around in there.
Okay. Okay. And then what is your spend a month just to live the lifestyle you have today?
When I try to spend money, around $3,000. Cars paid off, house hacking for free. I eat out all the time. I watch every movie. I have every streaming service.
Yeah.
And that's when I try. I'm on this trip. I'm trying to spend $10,000, and it's a challenge. Like I went out with Daryl, and we're going in a helicopter tomorrow to shoot rifles. So Daryl, I love you. I'm trying to spend $10,000 while I'm here. So the 3,000 a month is an actual real number.
Okay. So at the end of the month, you have $10,000 easy added to the stack every month.
Easily. Yeah. It's 10. Easily. It's like 10 to 25 with my W-2. So $10,000 easily when I just
on the stack, just
stop
piling up every month. Okay.
Right. So the reason I wanted to talk to you guys is because there's some ideas I've thought of, and then I want to see what your
first, given this is my channel, I want to stop here for a minute. Okay. First and foremost, this is how many years have you been doing this? 10, 11?
Almost 11 now.
Yeah. So let's call 11 years. This is a great place to be after 11 years. You sacrificed, it was slow. It got faster. It's what I tell everybody, right? The first 5 years suck. But then there is an income snowball. I got to tell you, this would have gone even faster if you recycled capital, as we've talked about. Just didn't want to do it. Totally cool. I'm trying to tie all these together with the things that I talk about on my channel. Lastly, you have kept your expenses low longer than you had to. You can clearly afford your own house. You live in a duplex. You're comfortable with that. Totally cool. The fact that you live on $3,000 a month hurts my head because I spend $3,000 a month eating out. It's just that's our thing, right? So, this is where everybody can strive to be. And again, you started $80K in debt, $17 an hour, sacrificed, just kept moving forward. So congratulations. You are an example for everyone about what is possible. You truly can make work optional in 10 years. You could be a millionaire in 10 years. You can have 5 figures of true passive income in 10 years. This is an amazing story that needs to be celebrated and told over and over. Business Insider needs to do more articles on you. You were the average American living paycheck to paycheck, probably had no hopes and dreams. You thought you were going to work till you died, thought the system was against you, and you freaking figured it out. So congratulations.
I actually told my kids for years, I'm one of those guys that's probably going to work till I died. The Marine Corps pension didn't work out after 6 years. Law enforcement didn't work out after 8 years. Like every time I thought I had that American dream figured out, it kept getting ripped away. So I took control of that, like everybody watching should do. Take control of your finances. Stop worrying about one income. If your job is your source of income, that I would lose sleep every night.
Yeah.
I don't know how I lived all those years with that being the source of income.
Pretty cool. All right. Now the position you're in, and we will start asking questions.
Okay. So the position I'm in is I have that savings. I have 6 mortgages in my name, so I can go up to 10 still residential loans. Mm-hmm. I would not do an adjustable rate loan. I don't want to do commercial that has a loan reevaluation period. I want my assets to let me sleep well at night. Mm-hmm. So those are some options that are just not there. I don't need more units. I don't need more cash flow. Mm-hmm. I'm half considering if I sold my single family house that's paid off, I could take that money and pay off 2 mortgages. Mm-hmm. So increasing my cash flow a little, but reducing the number of places I have to manage. Probably not the best option.
Mm-hmm. With how much time you're burning managing them currently, probably your best option.
I did have to send 2 texts. Today's the 5th, and it was just, hey, I would like to help you avoid some late fees. It's the 5th. And this guy's like, oh yeah, I'm in Germany because he's in the Air Force. And he's like, it's a day off or whatever he's at. So it did take me, however long it takes to send 2 messages today.
I think too often this is an area that a lot of people make mistakes, is that they don't realize the value of a dialed in property. Mm-hmm. A dialed in property is utopia. So when you get, the last 9 months, I've been dialing in 40 units. It sucks, right?
Yeah.
Because I am very particular in how I want my units, how I want them presented, what the things that I want done. So like you do the lights outside and we change out the doorknobs and things like that. One of the things that people must consider when evaluating a strategy like this is having a dialed in property is worth a lot of money, because any property that you're going to trade up or trade into, if you were to do that, you are going to have a bunch of make ready, get ready, dial it in, do the lights, do the doorknobs, the little fix it list. You're going to have all that stuff. And it's not so much a money thing, but for you, it's time, effort, and energy turns into money, but that's the stuff that you want, frictionless rentals.
Mm-hmm. That's a great point. And that's probably why I shouldn't sell the single family house. It's paid off. 2 years ago, I put a new roof on it. Everything inside works great. It's a Section 8 tenant rented for $2,200 a month. I don't think I've heard from her in a year. Mm-hmm. So,
as far as you know, the house is still there, but you're getting paid, so that's okay.
The money's there. I don't care about the house.
So I think so this is where I kind of go down that path of, it's already made ready. It's already sitting there. It's ready to go. It's dialed in. It's making you money. You already own it outright. Anything that you're going to do is you're going to trade out. You're going to trade into, again, for you, you're going to trade into friction. You're going to trade into having to do more work, having to do make ready. Now, There's certain points where it's certainly worth it. For me, I made that trade out into 1031, bought a bunch more property, then had a bunch of make ready. But that income is now 3x what I was making on that one single family. But that was work that I knew I was going to be doing. So, and knew that I wanted to do, because I know that all three of us are different, with what we want to do for work. And so for me, it was, yes, sell the house. Yes, 1031. Yes, get into this next house. Yes, do a $60,000 project, but finish that $60,000 project. And now I'm triple my net of what I was on that previous one single family. I'll take the triple net, but it took that entire process took 6 to 9 months to sell 1031, find, rehab, and get done. But that's where you create value.
Yeah, what the goals are is what matters.
Yeah. So
Right.
I think you have, what I'm hearing you talk about is you actually have two different decisions, is what I think you're telling us. So let's talk about the cash pile, right? You have basically you have $330,000 that grows 10 grand a month, or actually grows 20 grand a month. If I am you, and this is where most people, again, I'd love to hear from people at the end of this, what you would do. So you really have three choices. You can sit on it, wait for the next great investment. 2, you could pay off some debt, right? Right. That's an option.
How expensive is that debt? Sorry, Mike.
That's a good question.
This came up with Mike the other day. My highest interest rate is 4.8 on about 230,000. All the others are 4% or less.
Yeah.
But I assume that 4.8, you're how many years into that mortgage?
2018. So 4 years.
4
It's
years.
only 4 years. That's not bad. Okay.
That's not bad. And then the last thing you could do with the cash is the next purchase could be cash, right? That's another thing. So you really have 3 options. And I think, so let's talk about the pile of cash, and then we can talk about the free and clear house second. Cause I think those are different decisions. Actually, I think Matt already answered the house. It's already dialed in. What are you doing? I think that's my answer as well. So I think that's answered already. When you think about this pile of cash, it's very interesting because I have put myself in a similar position. The numbers are different, but the position is the same. I would never consider paying off the debt. I have all my debt 30-year fixed below 5%. I will not touch that ever until they're paid off, 28, 29, 30 years from now. I would never consider it. 2, I don't think unless I was going to do a BRRRR project where I had to buy it cash for some short-term reason, I won't buy something cash. So, the third option is one for me, and I've been very clear, right? The beauty that I have, Dion, that you don't have yet, this is your first transition from a crazy dynamic seller's market into what I think is going to be a pretty good buyer's market. Maybe not the best buyer's market ever, which I experienced in 2010, but I think it's going to be a pretty good one. I have experience knowing that this doesn't happen as fast as you want. I know it takes dozens of offers, right? I've told the story many times about you writing a 1-1 on a 1-3. That needs to be celebrated. It needs to be encouraged. It needs to be repeated and repeated and repeated. It might have to go 30 times, but we're in a market where that repetition and consistency and knowing your goddamn numbers is eventually going to pay off. So I have the advantage of going through, this is my third market transition. So I already can see the future as clear as day. I just don't know, is it July? Is it September? Is it January? I don't know when I'll finally land one, but I am confident I will land one and it will be massive. So my encouragement to you is you are staring opportunity cost in the face. Opportunity cost is something you learn in economics that is almost never thought about. So this $330,000 is an opportunity cost for you. And it's always what else is the best use. So for example, you could pay off 4.8% debt. Your opportunity cost is what else you could do, right? You could buy something in the future that's a 12 or 15 or 18% return. That's a horrible use of cash, right? So when I was thinking about this, knowing, given that you announced this was coming, is we just have to educate people on opportunity cost. It might feel better to pay off the debt and go from 6 loans to 4 loans or whatever it would be. Knowing where you are, As long as you are comfortable adding units, to Matt's point, the answer is buckle up, write great offers, and see if you can land a deal in 2 years. If you cannot land a deal by Christmas 2024, then pay off some debt, do whatever you want. You're already good. But you've got to enjoy this transition. You already know it's here with your 1-1-1-3 example. I'm here to tell you it's going to get better. It's just going to get better. I know it's hard to believe. I know you haven't been through it before, but it's going to get better. You are going to land something eventually that you're like, I can't believe I got that deal. It's coming. I know it is. Be consistent. Write the offers. So that's kind of where I land on the pile of cash.
Yeah, I think so. For me, again, we invest a little bit differently. I'm growing. I want to grow and still maintain and grow aggressively. Because quite frankly, taking care of 130 is the same as taking care of 100. Whatever, it's the same, and so I might as well just make the number bigger. So long as we execute and so long as we still follow our process. But yeah, I mean, I look at it and I say, I wouldn't sell your house to pay off 2 debts. I believe single family in a lot of the country has capped out. So I would sell the single family house, and understanding what my tax ramifications are, you can always 1031 it. And if the 1031 doesn't come true, you're still only liable for the taxes you were liable for before. The difference is maybe $1,000, $1,200 that it costs you to set up the 1031. That's really all you're going to be out if the 1031 falls through. Yeah. I mean, if I were in your shoes and but I had kind of my mindset would be sell the single family because I did, 1031 because I did, and find the next thing, even if I'm paying a bit more, because it's going to be a much greater return on that capital than the single family house. Then I put myself in a position where I've 1031, and you can do a couple of things with that. If you found a couple properties, or even if you can do a multi. So you can do a 1031 where you actually buy 2 properties. So I did a 1031 where I bought 3. I had so much profit on the deal that I was able to buy 3 more properties with just the profit from that one deal. That's the tougher thing, because obviously inventory, that's the bigger challenge. But yeah, for me, I would be looking to, even if I didn't 1031, I would just want to understand what my tax ramifications are, which is probably 20%. But in all likelihood, in my eyes, I think single family homes, certainly kind of that caliber, like what we've talked about, and with what the multiple is that you're getting versus what you paid, to me, I think you're much closer to the top of the crest and potential decline than you are. What's the likelihood in a year? Is it more likely it's going to go up 10% or down 10% in the next 12 to 18 months? The math I run, I think it's more likely it's down 10% in 18 months than up another 10% in 18 months, or it's on the negative side of the ledger. That's my feeling, but it depends on what you believe.
Yeah. So for me, it's pretty interesting because I think I would do it differently, right? Again, part of it's because the house is already dialed in and working, and part of your 1,200 or whatever.
Sure.
I would be doing my work. My first job would be to deploy the 330 or whatever it was. And for me, just to be clear, that would probably be at least 2 deals. I would not put all the 330 in one deal. Again, just knowing the price points. That would be my goal. Yeah. And again, in the market that I see coming, that might take the rest of this year. Once deployed, then the house comes into question. Because again, I think we are going to see a change. And if units start to break next year because of commercial financing and bridge debt, I want the house to be my 1031 into broken commercial. Commercial is not broken yet. It's a year away from breaking. So I would do it in definitely a different order. And I don't care if it goes up or 10 or down 10. I think the chances are it goes up 10 for here because we haven't seen 40-year mortgages. We haven't seen first-time home buyer programs. If we have product that's, again, we may see a market go down 10%, but it won't, different inventory will be treated differently.
Sure.
What I understand Dion owns, it's going, again, if you were to ask me a year from now, it's up 10%, not down.
So Dion, this house, and and you don't have to share these numbers, but I think you've already shared them in the past. This house was like $110,000 house.
When I decided to pay it off, I owed 121.
Okay. And it's worth like 400.
Mm-hmm. I'd walk away with 400.
Okay. And so you have $400,000 making you 1,800 or 1,600. Because what are your expense? I mean, because you're $2,200, right?
That's a
Right.
good quote.
Yeah, it's about 1,800 in cash flow.
Yeah. So you're $1,800 a month in cash flow. So you're essentially getting a 5.5% return on your actual capital.
On your equity.
On your equity. Right. Well, but it would be capital if he sold, because if he's got 400, then he's got the capital. So my only point is that would you do a deal right now for 5.5%?
Not in my market, no.
So you can take the 400. That's what you're going to net. You're going to find a deal that's going to make you a lot more money on your capital. I think your capital is, I think you have dead capital there. So,
So the question then, Mike, your crystal ball moment.
Sure.
You think multifamily is broken. So I think there's a window of multifamily from 5 units to 8 units that if currently has adjustable rate mortgages, loan evaluation periods, or anything like that. A couple of years ago, didn't have convoy home mortgages, 30 or 40 year fixed rate debt for it.
Right. That's right.
What's the timeline on that? So if I sold this house in 6 months or in a year and took that money to then buy broken multifamily.
Was there a question? That sounded like a statement.
Does that seem like the timeline to you?
Yeah. Again, I don't know if it's 12 months or 18 months, but I'm doing the same thing. What am I doing today? I'm trying to buy as much residential property I can because I think it is the better price stuff in my market. I also firmly believe that I will repeat that great step 2 or phase 2 in my first book, where I 1031 8 houses to 80 units. Commercial market and the residential market are not the same. They move in different waves. Nobody understands this unless you've done it before. I believe the commercial market, the 5s to 20s, is going to blow up when their 5 and 7 year terms come due. I believe I don't know who I had a conversation with. I think it was Matt on Tuesday. Being a landlord is going to suck the next 2 years, right? Rents are not going to go up as much as you want. Rent collection is going to be harder. There's going to be a lot of landlords that are like, I'm out, just get me out. And again, they're going to have equity, they're going to have 35% because in commercial, you got to put real down. So I'm going to be able to buy them with a haircut. So yeah, that's what I'm doing. I am buying residential so I can on purpose 1031 into commercial. It's not this year. It doesn't break that fast. It will start breaking next year. It will really break the year after. And oh, by the way, what's going to happen in the residential? 40-year mortgage, first-time home buyer programs. So all of my cheap entry-level homes will get another 20% pop, and I will sell out at the top because affordability will crash again, and I'll 1031 into apartments. That's what I am doing.
Would that be considered an entry-level home there, Dion? $400K?
Kinda. It's a 4-bedroom, 2 baths. So
what's median? What's the median home price?
Oh, I actually don't know because I do small multifamily, so I haven't really looked at single family. I'm guessing 380, but that would be a guess.
Yeah, so you're right on the line.
Yeah, right in the ballpark. Yeah, like I said, I mean, the way that I evaluate existing assets, because we try and get out of single family stuff, the way I evaluate existing assets is what's my actual return on capital, and what's my best use of that capital?
Yeah.
And
so let's be very clear. I don't want to.
Good.
Because when I hear the word capital, I just think of it different. You're thinking of the 400 exit.
Yes.
I think of how much capital I put in.
Yep.
So how much cold hard cash? Because some of that's appreciation, right, Dion? Some of the 400 is appreciation. How much cash came out of your bank accounts over the years in that house?
So when it was rented, I was not counting it. But at one point when I decided to pay it off, because I got it with like a 0 down when I bought it, right? So I lived in it for a while, then I turned it into a rental.
Sure.
It was $121,000. So that was my out of pocket to pay off the mortgage when I turned it into a rental.
So that's the number I look at. Because again, I'm about yield. I'm about cash. I don't give a rat's ass about appreciation. So let's 1,800 times 12 equals 21.6 divided by, let's call it 130. All right. So that's 16%. That's okay for me. You're basically making 16% on your money.
But then let's talk about opportunity cost.
No, absolutely right. Yeah, I totally get it. Yeah,
Again, like but here's the best part. Any of these options are awesome.
Yeah, they're not horrible.
You're just like, do I want pie for dinner or would I prefer cake?
Yeah.
You're getting pie or cake either way. And so that's awesome.
Yeah.
But yeah, for me, single family doesn't work where I am. So I got out of my stuff as fast as, like, literally now you have to make 20% more than the median income in my market to afford the median house.
Yeah. 20%
more than the median income to afford the median house. Well, even, 40-year mortgage and the government coming and doing, I hope they don't, but if they do, then yeah, you're going to get another big bump in that property. It's, for me, is, and here's where it might also differ, is that it's not like there's that property out there that you could turn that into now anyway.
Yeah, exactly.
But the problem is, and what still I have PTSD over, is when the banks told me no for 2.5 years.
I remember.
And right, Mike, and that's awful. That's just because you're just like, what do you mean? I've got all of these performing assets. Yeah. Everything is seasoned. Everything is making money. Why are we even having this conversation? Why won't you give me some of the money?
Yeah, that's why I would never pay off the property. That's not it. That's not an option.
That's exactly right. That's because you get financially locked on a property where they're just like, yeah, sure, we'll do another deal with you, but we're only going to give you 50% loan to value.
Yeah, at 12% or
exactly.
Whatever.
It's some garbage number. Like Countrywide gave me a 10.25% to pull like $4,000 out of the house, and I was like, oh, really? You guys are all hard.
Yeah, no kidding.
Like, so yeah, so I look at it and I just say it really depends on what the going forward strategy is, because in my market, I can't speak for your market. In my market, I believe housing is getting to the point where we're breaking new records every month, and we have for the last 4 months. That will maybe continue for a little bit more. It doesn't continue forever. And when it stops happening, then everybody's like, we're not breaking records anymore. And then the retreat is faster the opposite direction.
Yeah.
I don't want to be in an asset that's already taking 20% more than the median income to buy a median house. Number two.
Agreed.
And number three is I'm looking at not just what that 400,000 cost me. In your case, it cost you 120 grand, but you've had all the profits and everything like that off of that money as well. I'm looking at, does that $400,000 create a whole bunch more income for me somewhere else, because you still want more income snowball? You're still saying, hey, if that 400,000 can buy me that, whatever, a couple of properties, a couple 800 or a couple 400, $500,000 properties, even if they're duplexes, a couple $500,000 duplexes, what are you making on those couple $500,000 duplexes? So that's kind of the thought process that I go through and what I did in my market. But again, this is where market dependence is so critical. Also, what you want your end goal to be. What do you do with another $3,000 a month of income? It's not going to change your life. It just means you're going to need new scuba outfits.
Right.
This, Dean, I'm not even sure if we helped you. It, again, is first world problems to have, both whether or not to sell the house or and what to do with the cash. So that is awesome. I want to remind you of all the very impressive numbers you shared. I got to tell you, the most impressive number to me is you can live on $3,000 a month.
Yeah.
Seriously, dude, my food budget is $3,000 a month. Yeah,
my food budget's probably around 1,000 because I find the restaurants in my area. I never eat at home. I only eat out. Like there's this Verbo I'm in. There's nothing here. Like, and my house looks very much the same. So find the restaurants that have like a deal dinner. Like this night I want to go here. This night I want to go here. This night I want to go here. Yep. So it's $15 for a meal that feeds me twice instead of $50 for the meal that I just randomly found. Yeah.
I never even thought about doing that.
Yeah. Mike, get dialed in like that, man.
Come on.
The family nights and like you buy one pizza, get another one for free.
Yeah. Like
we are so cheap. Like we do exactly the same thing. We're just like, yep, Tuesday nights, Kendall Pond. That's what we're doing.
God damn it. I'm wasting money. I'm annoyed. I'm going to go home and have a conversation with Olivia. No, just kidding. That's not going to happen. That is her one. That's the one deal. She could do anything she wants. Yes, dear. Yes, honey.
Love it.
So Dion, how can people find you?
Usually not this confused, but right here on YouTube, Dion Talk Financial Freedom. I want to thank both of you. That actually gave me a lot of things to consider.
Exactly. Thanks. I'm more confused now than when I started.
Yeah. Great. Thanks. When I can't get to sleep tonight, Dion, you'll know why. It's exactly because of this stuff. I'll be running the numbers and be like, nobody's really got to do that. Look at the return. Like, thanks, Dion. That's awesome.
And then Matt, what about you?
Lumberjack Landlord on YouTube and on Instagram at 11:30 a.m. Eastern Time, live streams on Sunday.
Thank you.
Thanks for coming. I hope you enjoyed that. I did. It was a lot of fun to do. And I actually think I got a lot of information. I made a joke there at the end about being a little bit confused at the end, but there was a lot of things that I didn't actually consider. So I hope the video helped you. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.